Last time we spoke was October, I think, so 6 months or so. It's a lifetime, obviously, in the markets, the economy, and especially with the Fed. And I've been, and I know you watch, I've been perplexed, and we will talk about perplexity later, but I've been perplexed about the unwavering focus the Fed has had on cuts. It's been difficult to understand because it's been the entire time. And I'm just wondering, how do you view this period, that 6 month period, where the focus, that's all we've heard about? Did cuts make sense the whole time? What's causing that?
Thank you, and I'm happy to be here. Thanks for having me on. I was perplexed with the December pivot, if that's what you're referring to. It seemed to me the Fed was in a perfect position. Inflation was coming down, financial conditions were tightening, and to some extent, I feel like they fumbled on the 5-yard line with the game on the line. I remember saying to some of my partners, that's the speech I thought we might hear in March, as opposed to now, because there's like 4 or 5 more months that potentially could lead to inflation coming down the way they needed to come down. Instead, they set financial conditions on fire again. Bitcoin, I can't remember where it started from, but it went from like 30,000 to 70,000. Equities, obviously, credit, interest rates. Ironically, Duquesne was a major beneficiary of it because I had spoken at a Robinhood conference and, like an idiot, forgot that there was press there and revealed that I had Paul got me going in the interview and revealed that I had a massive leverage position in 2 years because I thought the risk reward, I think they were like 510 or 515. The risk reward with what was going on, we could potentially pull this thing off sometime in the next year, and the risk reward was terrific for that. I was a beneficiary because after their pivot, 2 years went down to 415. I didn't get the low, but I did get 430. But at that point, it was obvious that financial conditions, which is one of the things that put me in them in the first place, were turning. We were starting to get anecdotal from businesses that their businesses were picking up. So I exited the position. So I was a major beneficiary. But once financial conditions took off, it became very clear that this thing could go either way. So I didn't even understand why they put it on the table, but more curiously, why they and others continued to talk about, well, it's not going to be 6 cuts, it's only going to be 3 cuts or 4 cuts or 2 cuts. And I'm going, why are we even talking about cuts? Because inflation, if you remember, we did trillions of dollars of QE because it was 1.7 instead of 2 over a decade. But somehow now that we're at 3 versus 2, we've got to start cutting rates to bring in a smooth landing. So to me, it didn't make any sense. It was a huge mistake. But it goes back to, I don't know whether you remember, but Kevin Warsh, when he was in the running for the Fed job, used to talk about reforming the Fed. And I go, Kevin, well, what is a major reform we do? He says, we got to get rid of forward guidance. All this talking and all this forward guidance, first of all, we're all wrong on the economy quite often, me included. And when you put forward guidance out, unlike me when I'm wrong, who tend to change my mind very rapidly, they sort of get trapped into the forward guidance and stuck in it. And to some extent, they were stuck in this talk about continuing to cut rates, so financial conditions just continued to melt up. And finally, in, I guess, a month or so ago, the Fed pivoted, but then bizarrely, the last press conference seems to still be hanging on to this asymmetric directive of we're not going to hike and we expect to cut, but we're going to wait for the data. We're not guaranteeing you're going to cut, but it's weighted that way. And for the life of me, I can't figure out why, because if you look at the 6-month rate of inflation, the chart's very clear. It comes down from very rapid rates, and now, if anything, it looks like it's turned up. Look, I don't know where inflation's going to be in a year. Jerome Powell doesn't know where inflation's going to be. I don't think anybody knows. But they worked so hard, and they did so much work when they went from basically 0 to 5%. I'd hate to see them all throw it away here.
The first time I noticed was when he said, "Yeah, we're not going to do it today, but we're close. We're getting closer." And I didn't know, how do you know that we're getting close? And that went from, but we're getting close, to now, yeah, it's definitely not going to be now, but we think things are going to work out and they're going to be. He's never taken them off the table and never talked about even saying a hike is just, I mean, he took that off the table. And a hike is not, you think a hike is off the table? Definitely. 0% chance?
No, because there's not a 0% chance that inflation has a bottom. I don't know. What I would do is just say nothing and do what Fed Chair used to do. When you need to raise rates, raise them. When you need to cut them, cut them. Don't go on 60 Minutes. You're not a rock star. Okay, you're the Fed chairman. You're supposed to be running monetary policy for the good of the country, not to be going on 60 Minutes. And, you know, the whole thing, Bernanke did a lot of things that, by hindsight, I don't feel very good about. One of the worst was forward guidance. You got a bunch of academics talking about sending message to the market. You know, as a practitioner, I'd rather them just get rid of the whole forward guidance and just do their job. When you need to raise rates, raise rates. When you need to cut them, cut them.